Cryptocurrency. For those who aren't actively involved in the investing space, it's a word that seems to come in and out of the headlines every so often. For me, my earliest recollection of cryptocurrency is hearing the owner of an old music rehearsal studio that my band used to play in tells the story about how his son had put his life savings into Bitcoin. But with everything that has gone on in the last year, I feel like crypto has gotten more attention than ever. We've seen the likes of Bitcoin, Ethereum and Chainlink all post astounding returns at one point or another over the course of the last year. And although Chainlink has pulled away from its all-time highs, both Bitcoin and Ethereum are continuing to soar. And what's more is that many institutional investors are now starting to back cryptocurrency by setting aside large sums of cash to invest in the digital asset. So it's no surprise at all that every Tom, Dick and Harry on the street are rushing to put their hard-earned cash into one of the many coins that are out there. But should you be considering investing in cryptocurrency? How's it going, everyone? My name is Dan, but you can call me Malone, and today we're discussing cryptocurrency. Now this is a video which has been requested a couple of times over on my Instagram page, and with all the hype surrounding cryptocurrency lately, I thought now was a better time than ever to get this video out there. So what I want to do today is to provide you with my full opinion on cryptocurrency as an asset class as compared to some other alternative investments. The reason why I think this will be helpful is because at the end of the day, any investment that you end up making must make sense in the context of your overall investment strategy. And so by choosing to place your hard-earned cash into cryptocurrency, you're effectively saying that you believe that crypto as an asset class will help you to achieve your investment goals. And don't worry if you're completely new to the concepts of cryptocurrency or blockchain, I'll be going over some of the basics throughout the video to help back up the points that I make. And just before we get into this one, I want to make one thing abundantly clear. I am in no way claiming to be an expert in cryptocurrency. I have limited knowledge when it comes to blockchain technology, and I'm basing my opinions today solely on how I view crypto as an asset class from an investment perspective. That being said, while I admittedly am not an expert in cryptocurrency or blockchain technology, I would argue that neither are the majority of its supporters. That's not to say that crypto investors have no clue what they're doing. It's just that cryptocurrency and blockchain technology is still very much esoteric, meaning that they're likely only going to be fully understood by a small number of people with specialized knowledge. So just make sure you take everything that you hear with a grain of salt, not only here today, but going forward in the future. The last thing I'll ask of you is to leave a like on the video and subscribe. We make financial education videos on this channel aimed at making conversations like these more of a cultural norm. So without further ado, let's get started. Okay, so right out of the gate, let's quickly define what cryptocurrency is. Cryptocurrency is a digital asset which is effectively designed to operate as a medium of exchange, which in layman's terms just means that it can be used to facilitate the purchase and sale of goods and services between individuals, just like normal money. However, while in theory it might be designed or intended to be used in transactions between parties, in reality cryptocurrency has not been largely adopted for this purpose. What you need to understand is that cryptocurrencies are effectively the byproducts of blockchains, which are technologies used to record transactions and track assets within a digital network. Blockchain technology can provide numerous benefits to the way the likes of companies do business by yielding time savings, cost savings, and lower security costs. In order for the technology to work, the blockchain needs the help of miners who process complex transactions on the blockchain and receive the currency associated with the blockchain in return for their efforts. This is how the cryptocurrency is born. The cryptocurrency can then be used to carry out transactions on the blockchain, and therefore it can be said that the value of the crypto is dependent on its utility as a medium of exchange on the given blockchain. And the more users there are of a particular blockchain, the more utility the crypto will have. Now, as I mentioned, I'm not an expert by any means, and I likely made a mistake somewhere along the way there. But what's important to realize is that cryptocurrency isn't just an asset which exists in isolation. Instead, it must be considered in the context of the blockchain technology associated with the crypto itself, because that's what's ultimately going to give the crypto its value as a medium for exchange. The reason why cryptocurrencies are attractive in theory is because unlike traditional currencies, they can't be counterfeited, they are unbanked in the sense that they don't rely on any traditional financial infrastructure such as a bank, and they are frictionless in the sense that they don't rely on any intermediary to trade, which is both time and cost effective. Consider when you purchase something on Amazon. The transaction between you and Amazon is facilitated by your bank. Your bank effectively makes sure that 1, you have the money in the first place to pay for the product, and 2, that the money has left your account and has been paid for. But in doing so, they collect fees and waste time processing transactions. This is effectively what cryptocurrency and blockchain technology seeks to solve. They want to remove the middleman from the transaction. So having discussed the background behind cryptocurrency and blockchain technology, now let's talk about crypto as an investment choice. Cryptocurrency is a non-productive asset, meaning that it doesn't have the ability to generate cash flow and profits. When you purchase 1 Bitcoin, the asset that you receive will always be how it currently is. It doesn't have the ability to generate income in any way. The likes of stocks, on the other hand, are productive assets because they entitle you to an ownership interest in a living, breathing corporate entity which can generate income through its business activities. And this income can be distributed to shareholders or reinvested in the company to further expand the business. So because crypto cannot produce value for its owners, its value is largely based on market sentiment. Market sentiment is effectively how the market feels about cryptocurrency as an asset at a given point in time. And this sentiment can be positively influenced by developing use cases or negatively influenced by the likes of unfavorable legislation. This is why putting money into cryptocurrency is oftentimes referred to as speculation rather than investing. When you buy a cryptocurrency, you buy it on the assumption that you can sell it at a higher price down the line to another buyer. There is little backing the investment decision other than speculating on what the market's perception of the cryptocurrency will be in the future. Contrast this to the likes of stocks, where not only is an increase in the share price the goal of the investor, but also the receipt and reinvestment of dividends that the stock pays to the investor. Furthermore, an investor in stocks can base their investment decision on the tangible financial metrics of the company, such as revenue growth, profitability, and liquidity. These are known as the fundamentals of the company, and cryptocurrencies don't have such fundamentals. So does an investment in cryptocurrency make sense for the average investor? Well, that depends. Crypto is a highly volatile asset, meaning that its price can fluctuate in large increments very quickly and often. So in the context of an investment strategy, you should only invest in crypto if you have a high tolerance for risk and are able to bear a significant degree of loss with respect to the cash that you put into the initial investment. And if you do have such tolerance for risk, you should only dedicate a small percentage of your portfolio to crypto investments, as so to make them part of a well-diversified investment strategy with varying degrees of volatility. For nearly every investor, the best strategy for building lasting wealth is to invest consistently over an extended period of time and to avail of the benefits of compound interest. Putting all of your eggs into crypto makes little to no sense unless your goal is to outright gamble your money. If you talk to any financial advisor about investing, one of their first and foremost priorities will be to assess which investments are best suited to you as an individual, having considered factors such as your tolerance for risk, your financial circumstances, your educational background and experience, and more. And it goes without saying that lots of retail investors decide to put their cash into speculative financial assets such as crypto simply because they see green numbers on their screen and lots of news headlines. But they haven't necessarily considered whether A, the investment is suited to them as an individual, B, the investment makes sense in the context of their investment strategy and what they're trying to achieve, and C, whether they fully understand the characteristics of the investment. I'm not saying that investing in cryptocurrency is a bad idea. Volatility is something that all investors require exposure to in order to be able to achieve attractive gains. But managing the amount of volatility which you expose yourself to is a critical consideration which can't be overlooked. One of the most common reasons I hear around why people decide to put their cash exclusively in cryptocurrency goes something like, well, it's just money that I would have spent on beer and food anyway, so what's the harm? And this is funny because they've actually done well in setting aside a portion of their income for reinvestment, but they clearly don't have a well thought out investment strategy for that income. By launching everything into crypto, you've completely ignored alternative investment vehicles such as stocks, bonds, ETFs, commodities, real estate, derivatives, and more, all of which can provide you with access to both capital gains and income at varying levels of volatility. This is why someone who puts all of their cash into cryptocurrencies can possibly be considered as an investor. Their strategy for creating value has no fundamentals to support it. However, had they balanced their investment in crypto with other alternative products, well then it could be said that their interest in crypto is more calculated and seeks to expose their portfolio to a healthy level of volatility. I don't think I can ignore the recent scandal surrounding Ripple, aka XRP. In December just gone, the US Securities and Exchange Commission announced that it would be taking legal action against the blockchain for claims of illegal securities offerings. Since then, many outlets have delisted the crypto, with the likes of Revolut warning its customers that the crypto could eventually become worthless. The market obviously reacted by devaluing XRP significantly in a matter of a couple of days. Now, you could definitely chalk this down to being an isolated incident. However, I do think it's a fair point to mention that the regulation surrounding cryptocurrency at present is quite lackluster, and once regulatory bodies do take the steps to introduce tighter restrictions on the conduct of business, we could see some further devaluations on other cryptocurrencies if the regulation threatens the viability of the crypto as a medium for exchange. I know from my own experience working as an auditor of investment funds that there is significant uncertainty around how companies should account for cryptocurrencies on their financial statements, and how auditors can gain comfort over the validity of this financial information in general. So until clarification is provided via regulation, there is definite potential for significant volatility. To conclude, I just want to clarify that I absolutely support blockchain technology, and I think that it has the capability to revolutionize the way that businesses do business. Of course, I would love a scenario where we could live within a financial infrastructure which is highly efficient, cost effective and secure. And so the points that I've made today have nothing to do with what blockchain is trying to achieve, but rather it's the market's perception of cryptocurrency as an investment asset which needs to be brought down to reality. I understand that a lot of what I said today could be called into question due to the fact that the price of cryptocurrencies are rising so rapidly. But the point isn't whether or not your investment is going up, it's about understanding that the rationale behind your investment and the role it's intended to play in your investment strategy is critical not only to investment success but also to your overall financial literacy. So I really do hope you enjoyed the video here today. As always, this video and all other videos on my channel is for educational and entertainment purposes only and isn't meant to constitute advice. If you are unsure of anything that you've heard in this video, I would highly recommend going ahead and contacting a professional financial advisor before making any financial decisions. Please never make any financial decisions based solely on one person's opinion on the internet such as myself, and always seek out further advice if you require it. If you did enjoy today's video, if I could ask you to please leave a like and subscribe to the channel. Liking the video really does help me out a lot as YouTube pushes the video to bigger audiences based on the number of likes that the video gets. And make sure you also follow me over on Instagram. I post a weekly financial news roundup series over there which is exclusive to the Instagram page. So again, thanks for watching and I'll see you in the next one. Cheers.